Welcome everyone to the Monday Morning Podcast. Today I will be speaking with Angus Muffatti. Angus is the CEO of Agtuary, a agtech company that uses satellite imagery and machine learning to smooth out the financial planning of farms. I know that sounds super niche, but I'll let Angus explain how important this could be for the future of our global food supply chain. So let's get into it. Angus, how's it going?
Hey, thanks, Lachlan. Thanks for having me. Happy to be here. Yeah, well, I suppose I'll just sort of answer that question straight off the bat and say the there's the reason why what we're doing I don't think is so niche, and why there's specifically the industry is because we're thinking about particularly we started out thinking about the agricultural lending space, and that just in Australia alone is a $60 billion industry, and that's projected to nearly double over the next 10 years.
Wow.
And you look at these metrics around debt and agriculture funding, and the same sort of debt funded industry model is replicated all across the world. Like all across North America, South America, as well as Europe, Western and Eastern Europe. And you can see the same model and same practices being used and have been used, particularly in agricultural lending, that haven't really changed since the 80s or 90s, basically. I think the last great innovation for this space was really the spreadsheet. So it's been a while since that's been
Wow.
around, and I think there's a lot of new practices, and sort of particularly leveraging modern computing and modern software design that can really enhance what's happening in the space. That being said, yeah, I suppose what we're doing is a little bit more outside of that as well, where we're using satellite imagery. And so uh, the th- what we can do with satellite imagery, and particular thanks to government agencies like NASA and the European Space Agency, that have effectively built these constellations of imaging satellites, and now releasing this imagery in regular updates, like roughly every 3 to 5 days, for free for the whole world. And
Wow.
there's been a multi-billion-dollar global industry built off the backs of these data sets. And so
Wow. Wow.
we're leveraging some of those to help do macro level analysis of what's shifting and changing in the agricultural landscape. So pardon the pun on that one,
No,
but
no, no,
it's
not at all. Um,
but effectively what we can do is we can use derived metrics, some machine learning techniques as well. I mean, some other statistical techniques to evaluate, how the global system is. Well, you can do it globally, but we're specifically focusing on Australia for now, because you do need a lot of ground data to validate your analytics.
yeah.
So it's a
Yeah.
big expense up front to build confidence in, say, the metrics you're putting out. But effectively, we're looking at um, primarily in-season risk. And so how are different sections of the agriculture market heavily focused on grains at the moment, but that also branches out into pasture-driven businesses like beef and sheep as well.
Okay.
And so what you can do is, using satellite metrics, you can look at derivative metrics from around biomass, and that translates quite nicely into things like estimating yield for very specific commodity types. And so you can
Wow.
forecast with confidence, also using weather data as well. That's like rainfall, historical, as well as a whole bunch of other data feeds, things like land surface temperature, how much radiation energy from the sun over a given period. And this all comes together to build effectively leading indicators of where the, say, end of season harvest, what that's going to look like. Um, and so we we provide effectively leading indicators around, where, say, the portfolio of the bank is going to look like, but also on the purchasing side, where potential contracts might lead to, or leading indicators of where pricing might be around agricultural commodities.
Well, that is that's a lot to digest right there. But I think I read somewhere that the amount of debt uh, tied to farms at the moment has tripled in a certain period of time, and and the fact that, well, I mean, so many farmers just have a big difficulty sometimes securing finance, and the sort of lead time on that would be 8 weeks or so, sometimes to get financing or even insurance on a yield, perhaps. Um, so this sounds like a really sort of innovative way of addressing problems, not just for farmers, but for the purchasers as well, and also the sort of institutions that underwrite that whole process. So,
Yeah, look,
um,
I mean, and that's exactly it. Like, I'll just sort of bite off that first part around. Um, I suppose one of the things that I didn't say, in what I was getting to before is, uh, because of these outdated lending practices, and because of say new techniques and methods of information collection like we're doing are available now, effectively, like we're bringing a lot of like rich data and information to a very information poor space. There's a lot of lending practices that they have worked and they've worked reasonably well for the banks, like up until a point. But now there's a lot of, I suppose, shifting in terms of like the way that practice is managed. There's a lot of banks consolidating their lending teams into regional centers, and there's a lot less visiting, like on-site visits with the farms themselves. And effectively the industry is heading more and more that way, to be it's more like remote inspections. And so really it's a data poor environment that we're able to bring effectively non-financial data sets to the table, to be able to provide extra context around these farms. And nine times out of 10, like even just supplying like complete information, like let's not
yeah,
even talk about the data sets that we can supply, but just supplying complete financial information like about a farm, like longer term financial histories, longer than 3 years, like of the business's financial history, can save you around about 0.5% on your loan rates. And so
wow,
there's a there's a distinct sort of lack of, I don't know, emphasis just around like we need more information in the space to help drive better, uh, more accurate pricing around these loans. Where you have to look at agricultural businesses, is why it's maybe slightly different to a regular business is like you really have to look at maybe 5 year lives, like 5 to 10 year sort of time scales, because you have these big fluctuations in seasonality and performance,
yeah,
that can dip in and out, where you have cash flows which have come off like a really good year like the one that we've just had, that can supply cash flow for the farm for the next 2 to 3 years potentially.
yeah,
um, and so there's so much nuance when it comes to ag, and then once you can look at say grains as a whole sector, but then you really need to look at each individual commodity, like wheat, and then even quality grades of wheat, and then barley and canola and all
yeah,
the rest of it. Um, and so, I mean, when it comes to grains, we're focused on wheat, barley, and canola for the winter crop. We've been doing sorghum and cotton for the summer harvest here in Australia, and supplying information around that. But yeah, but effectively, yeah, there is a lot of nuance when it comes to this, but that's just even at a cursory level, at a macro level, there's just not enough information flowing around. And like
yeah,
more information, and including the information that we can supply when thinking about a specific farmer going for a loan, the additional data sets and say benchmarks that we can provide, um, more often than not, can lead to like a better, more secure rate, because it gives the credit team, say at the lending institution, much more confidence around the
yeah,
stability of that, like the farming asset, but also the farm as a business as well.
yeah. Well, I guess my next question is, how much data do you work with? Like, is there some, I imagine it would be absolutely massive, but, and I, and you did mention the sort of sort of types of data you're working with. Um, yeah, I mean, is it just absolutely too much to wrap your head around sometimes, or?
I mean, not so much. I mean, for us being a startup, it's more a question of personnel, like resources. I mean,
Okay.
I suppose I always think of it. It's one of those questions to have where, or sorry, good problems to have where, um, like we could always use more people on the team to, to
Yeah.
to cover all the work that we've got. But in terms of like just the size of data, I mean, we're looking at data sets that are maybe, a few hundred gigabytes, a few terabytes, that
Yeah.
that kind of level. Because I mean, like what we're working with. So imagine we're downloading like satellite imagery, you know, probably every 1 to 2 weeks, that cover, say, the whole east coast of Australia, for instance,
Yeah.
or as well sometimes including Western Australia, and that's on a 10-meter grid. So I think you've got, let's say, uh, in terms of individual data points, we're probably looking at a few billion data points
Gee
across
whiz.
that. So in terms of big data, like the size of the data sets that like Facebook and Google collect, it's really not
Yeah.
much. But I mean, it's still, uh, we could still run analyses on like our local sort of like computers. So we don't. It's not 100% necessary that we're using like cloud server infrastructure to run big computation analysis. Um, I mean, if you talk to my CTO, his his
It,
office is probably really overheated from his computer just working in
yeah.
overdrive. Uh, but yeah, it's still sort of like definitely big in scope. We're looking at continental scale analysis in terms of the satellite imagery, but it's kind of par for the course when you're doing remote sensing, particularly
Okay.
for the kind of work that we're doing.
Yeah. Well, um, I don't know what your background is. Maybe you're more of a data scientist kind of guy, or you classify yourself as that. But I read somewhere recently that they pitted in a competition a whole bunch of data scientists up against strawberry growers, and these data scientists have never done farming before, and I was not surprised, but I think other people would be surprised. And these were the best strawberry growers in the world. And yeah, the data scientists absolutely blew them out of the water. It wasn't even close. The quality, the yield. Um, yeah, so I think it's really interesting, this intersection between data and agriculture that is potentially the wave of the future and the way we're going. Because as you said, it's sort of a data poor industry in that people still are looking up at the sky and being like, "Oh, I think it'll be a good year this year for us," or "Oh, that's an ominous sign. I don't like that one." And it's so nice to sort of, in some ways, uh, eliminate human error or heuristics from the whole process in a way that hopefully gets more people fed. Because at the end of the day, we all need to eat.
Yeah, no, no, that's definitely the case, and I would say it's definitely not. I would say it's not quite as unsophisticated as that. It's
Yeah,
not so much like licking your finger and sticking in the air and feeling which way's the wind blowing, but it's it's the industry in terms of on the farming side of things is becoming very very sophisticated when it comes to uh, data as well as the tools that they use. I would say this is a lot of this because there's a huge industry of agriculture advisors, both in Australia and around the world. A lot of the technology is being driven through adoption by professional agronomist advisors. I mean, this is just for ag tech companies. It's just it's a smart move. It's like how Zero used accountants as like their effectively their distributor to sell their
yeah,
products. If you're selling a product to a farmer, you're probably better off getting scale faster by either selling the capability to enhance the work an agronomist does, or a business or a financial planner or business advisor in that respect. And so, I mean, that makes a lot of sense. But also, they're the people with the expertise to really leverage it because there is a education gap when it comes to a lot of particularly precision agriculture. If you've never used it before, you're looking at satellite imagery. You're kind of like, "Oh, what the hell is this telling me,
yeah,
really?"
yeah,
And so you have there's a lot of that gap is filled by agronomists who either receive the training or know how to use it or know how to convert that into something meaningful. And now a lot of, particularly the precision ag platforms, they are either hiring or working with agronomists themselves, and they're basically putting all of that agronomist knowledge into the software. There's a couple of really great Australian companies. Fluorosat's one of them. Only they
Okay.
did just change their name. They bought a US company. I forgot what
Yep,
they
I'll
changed
look
to.
into it. Don't worry.
Yeah,
I'm
but
actually pretty excited about this potential ag tech boom, and it might be something I talk to my subscribers about for the stock picking newsletter I run. But I think one of the themes we've been discussing recently is sort of what's happening in the commodities space and the potential that inflation could drive commodity prices higher as a sort of hedge. And I looked at the soybean chart recently, and it's just gone through the roof. And you might be aware of some of these broader sort of big moves for a number of different commodities in the last 12 months or so, particularly with agricultural commodities. And I think before we came on, you mentioned that commodity traders are now coming to you for certain products or services or your data sets. And I was sort of hoping you could tell us a bit more about what you see happening in that area.
yeah, absolutely. So Um, just, I mean, maybe I should get into my background just a little bit to preface
Yeah,
this.
that would help.
I'm not a commodity trader, by any standing. Um, you know, I do have a little bit of fun trading crypto on Binance, but that's about as
Okay.
far as my trading expertise go. Um, like my background, and same with my co-founder Matthew. We're both effectively data scientists. Our backgrounds in aerospace technologies. I used to, use applied machine learning, write code to optimize like design of spacecraft engines.
Wow.
And then, so long story short, got sick of working in a big company. Did a stint with Airbus.
Wow.
Really discovered I was an ant in an anthill, and sort of kept moving towards smaller teams and smaller companies until eventually, um, I thought I had enough ideas of my own that I convinced Matthew to to quit
Yeah.
working full time, and we started Agtuary. Around this hypothesis that we could bring non-financial data sets into financial decision making in agriculture. Um, uh, but effectively, yeah. So when it comes to the commodity traders, and it's not I would say it's not the way that you would view typical traders. Like these guys are actually buying hard assets, storing them at locations and infrastructure, and then exporting them overseas. You've got big players in the space like Grain Corp uh, or some of the guys out on the East Coast, like they've got ground teams that are going to the farms and buying contracts either pre-harvest or post-harvest, and getting trucks shipped out to the farms to fill up on grain and take them to ports.
Yeah.
Um, and so, like, say these big companies have, they have trading desks, they have trading teams that analyze all kinds of signals, and they have to respond to, international market pressures all over the place, just because they're trying to sell the majority of what they buy overseas. Um, they're they're interested in what we're doing, because we can help them when it comes to forming an idea of where they think the local pricing should be. So we're providing, like, obviously macro level estimates around around things like, how much is grown of what commodity type and where, and then also estimates in season of how many tons you can expect at the end of that season. um,
Okay.
and also monitoring, how much has been harvested, during the end of season period as well. And so that helps them to form a coherent picture around where potentially pricing is headed at, like, these local exchange sites, because you've got hundreds of different basically depots or exchanges, like, around the country, or even just on the East Coast. There's hundreds of these where they all have slightly different pricings per ton for grain. And so they're this is informing them to know at what price they they can either reasonably expect, or what price maybe they want to hold out for, if they think either an asset's over or undervalued. And so this is all the stuff when I guess when I was talking about earlier, like leading indicators for
Yeah.
pricing risk, really. Um, and effectively, it's the same kind of metric. I mean, when it comes to finances, everything's about
Yeah.
risk. What's your risk in a particular asset, or of a particular portfolio, or either collection of customers at the end of the day. And so that's really what our data is helping to drive on.
Okay. Well, we all sort of want less risk and being able to make better decisions, particularly in the world of finance, is sort of the holy grail. So I think it's absolutely fascinating that that your company. I mean, do you have ambitions to scale the business in the near future? And I'm sure you do, but where do you see Agtuary going in the coming years? Is I know it could be a bit of a difficult question to answer, given that it's relatively early days. Um,
Yeah, yeah. Look, I mean, to be honest, this is something that we've thought about a lot. I mean, there's a few roads open to us now. Like particularly, I would say particularly because of how early it is, and I mean, for us, we're still really discovering, who our core user base is, and really trying to scope the size of the market. Because the reality is, we're in a new type of market. We've seen some echoes of what we're doing over in the US. I mean, the prime example would be outfits like Indigo Ag buying Talus Labs, I think back in 2017. Right, I think it was around $25 million, and so
okay.
that's probably the largest exit of a business like that's doing analysis like ours that we've
Yeah.
seen. Um, and I guess I'm not really aware of any other large ones besides that as well. And so the size of the market really is unknown at this point. There's
Yeah.
maybe at most two other sort of players in this space, um, thinking about satellite imagery, agriculture, and finance. And really, there's one other company, Digital Agricultural Services. They're working with Rabobank on things like remote valuations using satellite imagery.
Okay.
So trying to value land assets. And so that's sort of so that those guys are very much at least from my perspective, a data play. And where we're looking at moving towards is that, like, we think the data is really cool and like really, really valuable and really useful. But the other piece of the puzzle that we think is missing is digital workflow. So just frankly, just
Yeah.
digital tools, software platforms to help manage this. And the intersection of like what we're building right now, we're probably about 3 to 4 weeks away from starting beta testing with a few of our early customers for our digital platform. Is that we want to bring these analytics into digital workflow tools. So it's you're not only getting, say, your team management and process management, but you're also getting that enhanced by these analytics that it can help drive some of the prioritization of where your workforce is looking, but also help inform at a high level, the health of, say, your portfolio.
Okay. Well, these workflow tools are, I guess, essential in translating the analytics you've got behind in the background into something that actually helps a range of business decision makers with visualizations, I imagine, and things like that. So, yeah, that definitely sounds like an exciting advancement for your company. And yeah, I mean, I'm going to sort of back up a bit here and ask you sort of a broader question, because humans have sort of struggled with famine throughout the millennia. So I suppose my next question for you is, uh, do you think this sort of expansion, and you mentioned there are only a few players in the business at the moment. Do you see the potential for sort of large data sets, satellite imagery, and also machine learning playing into, I guess, fixing up a supply chain that is sort of increasingly under threat, perhaps from climate change or political factors? I mean, these are big questions for humanity as a whole, and do you have some sort of driving ethos behind what you do, and perhaps a hope to solve some of these food scarcity issues?
Yeah, yeah, definitely. I mean, I think the like one of our original the original sort of idea that we started on was that we could use our analytics to help identify potentially underperforming land or underperforming farms. And the original hypothesis wasn't, say, for to make sort of advantageous purchases or something where you could see that going, but it was really to look at how do you effectively deploy things like drought relief capital. How
Mm,
do you get and this is an ongoing conversation that we're having with some of the lenders here in Australia. Some of those are the big four banks as well, whereby at the individual portfolio level, you have a lending manager, and they have maybe between 50 to 80 agricultural clients. Um, Generally, like now, since I guess the Royal Commission in 2018, more and more of the banks are starting to do what's called full reviews, like annually for each of their clients. And so that's collecting a lot of their financial info and updating their information, whereas they would traditionally do that maybe on a 4-year rolling basis. Um,
Mm.
what we see we can help drive is potentially a change in the culture of management of that. Like number one, digital workflow tools. A lot of this is review stuff is done by paper or just typing, like manually
Old
entering data.
fashioned.
Yeah, and so we can streamline a lot of that. But additionally, with the analytics being brought in, we can give the portfolio manager an overview of who might be facing some trouble at the end of the season, because if you say you can translate from potential like pricing averages around specific commodities, what's being grown on farm, and you can say, okay, maybe let's go talk to this farmer. Let's move up their review, for instance, earlier in the year. This is, say, particularly from a bank's perspective. But let's move their review earlier in the year and make sure that we work with them so they've got the right financial plan so they don't fall into arrears or
Mm.
even insolvency. And so that's something where you can advance that conversation, where traditionally the bank's getting a call maybe when it's, I don't know, 2 to 3 months too late, versus
Disaster's
maybe,
already struck.
yeah, that's exactly it. And maybe moving that conversation potentially 6 or even up to 9 months earlier. Um, so trying to avoid and make plans, so the business continue its success into the future, um, rather than everyone jumping on the phone when the
Yeah,
proverbial
yeah,
has
has
hit
hit the
the fan.
fan. Yeah.
Yeah.
Well, that's really cool. It seems like you've got a sort of moral element to what you do as well, and I think that's an excellent thing. Um, and this,
Well, that's exactly. I would probably also add, some of the stuff that I mentioned earlier around pricing risk, that commodity traders are interested in. There's also an avenue there whereby we can potentially give access to farmers themselves, so they know, one of the big shifts in the market, particularly the grains market, is that a lot of the storage, the majority of the storage used to be in these big depots run by these, multi-billion-dollar grain trading companies. And
mm,
now, in the last couple of years, that's shifting, whereby farmers are now buying more and more on-farm storage. So basically, silos to store their grain. And I think it's just last year or the year before where the transition now is like the majority of storage is now on-farm. And there's there's a lot more strategy, like effectively strategy, when it comes to selling your grain from the farmer's perspective. And so there's a role that we can play in that to give farmers an indicator of, well, no, potentially either the price is going to go up, so hold your grain, or potentially the price is going to go down. I mean, again, this is almost trying to bring the grain trading to the same sort of level or insight that you have potentially with either regular stock trading, where you have a lot of these indices or metrics that you can
yeah.
build to say try and estimate, make educated estimates of where potential local pricing might be going.
Yeah, and the fact that you're helping out potentially the little guy as well is quite nice because, I mean, this is just an anecdote, but I used to have this relative who had a pea and lamb operation, and he said to me one day, farming is an expensive hobby. Um, so that's sort of the perspective I sort of received when I've spent time in country Victoria, and sort of the hardiness and how difficult decision making is in that environment when you're a small operator is very complex. And if you can bring tools to help them make better decisions in a sort of fluctuating environment, I think that is an absolutely excellent thing. So I guess good on you, Angus. Um,
No, it's yeah, it's It's pretty cool. I mean, it's not something that we've built out yet. I mean, it's just another one of those like question of resources, and but I mean, particularly when it comes to that level of pricing, that's or like indicators around pricing. That's probably not something that we'll have ready for even say like our sort of the corporate end of our customers, like for the next potentially 12 to 18 months. And
Okay.
this is stuff
Yeah.
that we're working on now. But obviously, our data is being used to drive that decision, drive those decisions. But we're trying to bring our, I guess, our capability to bridge that gap more and more forward, so we can almost get to an indicator of where we think, like pricing locally will be. Um, yeah, I suppose on that perspective as well, it's really interesting. Like, I mean, myself, I mean, you probably picked it up from where I talked about my background is we're very much industry outsiders, and we've we've been lucky enough that we've been able to secure investors and advisors who have been in this industry for the last 25 or even like last 40 years,
Yeah.
and so we've been able to really learn really, really quickly about the dynamics in the industry, particularly leveraging their experience. Um, and so I suppose one of the things as well, I mean, and the other additional thing is like a whole lot of user research was done. I think maybe 90% of my job is like just talking to customers.
Mm.
I think we just last year alone, we've probably talked to over the 400 bankers in the ag space. We've then talked
Wow.
to you know, uh, maybe around 60 to 70 in the ag accounting space as well, and then as a various mix of like brokers and advisors just across the industry, just to really try and understand the landscape. Um, and one of the things that's happening, like much like the US has maybe potentially already gone through, or yeah, has gone through, is there's a lot of consolidation happening in farming businesses. So
Yeah.
um, the the idea of farming as a lifestyle, or as kind of like you put it, like an expensive hobby, um, it's that kind of attitude toward farming is kind of fading out. These are you know ostensibly quite large businesses. Multi-million dollar assets. People operating big teams of personnel doing a lot of physical labor, and intense labor. Throughout certain periods of the year, and there's a lot of advisors and inputs that go on to these businesses. And so I think it seems like uh, at the very least there's a big trend, particularly the people coming the younger generation coming back to the farm to work the farm. Are generally very well educated, university degrees, in both business as well as either agronomics or finance, and saying, well, no, this is a multi-million dollar business. I'm either taking my family farm that my parents and my grandparents have run for the last 100 years, and I'm like, just like every other industry that has their startups, they're bringing and we're basically getting this sort of like startup mentality like filtering through to like everyone who's running their own business in the culture. They're adopting the same sort of ethos as well. They're seeing these ag tech companies trying to be like, oh, we want to grow and supply our stuff to the world, and they're like, well, why shouldn't my products as well be supplied to the world? Why can't I grow my business like this? And there's no reason why not. And so you've got really, really ambitious um, younger farmers. And I suppose when we're talking about the age demographics of farmer, younger probably means between their 30s to 50s. Um, but you've got these guys that are looking for, well, where's the next bit of land that I can build? How can I turn my what has been my family farm into a professional organization? How can I grow this to be an actual enterprise? And there's a lot of that. I think there's a lot of that thinking driving consolidation in the market, but also farming is one of those businesses where you have um, economies of scale. Like effectively the larger the farming business, the greater your margins will be, the more sophistication that you can, uh, the more that you can spend on the sophistication and automation, some of your farming practices, the more effectively, you can create a budget for almost R&D and experimentation. There's a whole lot that comes with getting scale. And I think a lot of these farmers see that. And so, you mentioned earlier that, you know, while, while farming debt, as well as like farming debt, as well as the farming industry output has effectively tripled over the last 30 or so years, um, farming productivity has also doubled, I think.
Okay.
Um, might need to
Well,
fact check me on that, but I
yeah.
think it's approximately doubled as well. And this has really come from a lot of, say, the economies of scale, but also improvement in technologies as well.
Yeah, well, I read somewhere on precision farming that if just 10 to 15% of farms around the world picked up precision farming, sort of in a full bore way, the yield could jump up to 100%, which is it's just wild that if 10 to 15% could generate that much of an increase in output. And I've been studying economics quite a bit recently at university at RMIT. I believe you went there too.
Yep.
And yeah, efficiency is really a big theme for me. And yeah, who knew farming could be such an exciting, dynamic sphere of the sort of financial world? But I think it's very cool what you're doing, and I might just finish up this conversation. I'm conscious of people's time. That you mentioned you met up with some SpaceX people and some NASA people when you're an aerospace engineer. Maybe you could just finish with a little story about going to see a rocket launch in Florida.
Yeah, yeah, absolutely. Um, yeah, that was a lot of fun. Yeah, and I was still, I guess I was still a student at that time as well. So that was part of uh, a competition that NASA's been running. Well, NASA and the NIA, they've been running for, I think, 25 years, called RASCAL. So it's the Revolutionary Aerospace Concepts Academic Linkage. I mean,
Okay.
Americans and their acronyms, right?
Yeah,
But
they love them.
they're always bacronyms. They come up with the acronym first and like, how what words will
Yeah.
fit in. But that's effectively a design competition. And technically, it's open to only US universities, but we were able to participate as a team from RMIT, um, because we worked with a project with a US university, and so that's the way that a lot of international teams have been able to compete. And so I think we've been there. Well, excuse me, I've been there personally 3 times. Sorry,
Yeah,
my
cool.
memory's a bit faulty on that.
That's all right.
Um, and then, as well as my co-founder Matthew, he's been there 4, I think. And so we were the first Australian team to compete in that competition. And I think the first year was designing a lunar habitat that can survive for 50 plus years and
Wow.
support 40 people in a orbit around the moon. And then one of the years that we won our category, because they have a few different design categories, like different challenges.
Yeah.
We won our design category for cislunar logistics system. So effectively, trucks in space. Like, how do you build
Wow.
spacecraft in order to ferry cargo between low Earth orbit and low lunar orbit on a regular basis? What's the most cost effective? How do you design the trajectories? Basically, all of like the structural design, propulsion design, like trajectory simulation, and also budgeting costs, like R&D costs to get it off the ground, then operational costs and expenses. And so
Wow.
basically, you build this whole it's called a design architecture around these challenges or concepts, and then you've got judges from NASA, NIA, SpaceX, Blue Origin, as well as a few other really cool space companies from the
Yeah.
US. Guys like SpaceWorks that work a lot with like Boeing and Lockheed Martin.
Yeah.
Design, like helping to do this like design architecture stuff.
But
So that was really
where
cool.
where does the rocket launch come into this?
The rocket launch. So the really cool thing about the competition is they always schedule the competition. Like, the finalists get invited to spend a few days on the Space Coast, staying at the Hilton, just south of Kennedy Space Center. And
Yeah.
they always time the competition um, to finish like one day before a rocket launch is scheduled. And
Yeah.
so So ideally, you go there, yeah, you stay at the hotel, you have this big conference, you do your presentations, you get to hang out with all the really like interesting and cool space people, um, and then at the end of the competition, you get to see a rocket launch, which is just so
Yeah.
freaking awesome.
Yeah.
It's we're viewing this from like 10 like we saw a Delta 4 Heavy launch the first time I was there.
Okay.
So that's a United Launch Alliance vehicle, and so we were viewing this from maybe I think it's 10 miles away, so about 16 kilometers,
Still
um,
reasonable close,
and
and you get a
and
good
yeah,
view of the
you're
landscape.
watching
Yeah.
this like tiny little thing on the horizon, and you see it go up this bright this bright spot, and you're sort of waiting, and it's about I don't know. Yeah, it's maybe about like 20 degrees off the horizon, and then you start to hear this huge like rumbling sound, and like
Yeah.
the whole air just around you is vibrating. You just feel the noise like just throughout your whole body, and it's just like, and you just see this thing just roaring into the sky. It's
Yeah.
like
That's pretty
oh man,
cool.
like the raw power of those things is just phenomenal.
Yeah.
It's just yeah, if you ever get the chance, it's something you just have to witness like
Okay.
firsthand. It's just incredible.
Yeah. Nice one. Well, I think I might wrap it up for our listeners and our watchers. I'm envious that I would like to see a rocket launch in the future. And yeah, you're obviously a very bright guy doing very cool things, Angus. So um, awesome to chat with you, and I'm sure we'll eventually run into each other at some point down the track. So it was an absolute pleasure talking to you, and good luck with Agtuary.
Thank you very much. And look, it was really a pleasure being here. It, like I really like talking about what we do because I think it's really
Yeah,
interesting and cool. I mean, I wouldn't do it otherwise.
for
But
sure.
happy to come on again if people are interested to hear more. But yeah, no, thank you.
Okay, have a good one, Angus.
All right, take care, mate.
See you,
Thank
mate.
you.
Bye.